Hello, friends. Welcome to Nirmal Bang. I am Piyush Jain, and today we are going to be talking about markets. First half of this year is already finished. We are talking now about the second half. Already we are in December, so the December quarter is almost about to end. It's a combination of festivity for this quarter. Diwali is gone by, Christmas is coming by, New Year Eve's also implies a lot of consumption activities. But then also we are stepping into general election season. It's going to be a political event season as we step into the fourth quarter. Also implies some activity for the markets. We also have seen a couple of important points where we have seen upgrades on the GDP estimates by RBI. We have seen some strong economic data. Combining all of that, we really want to know basically where are we at present? The buoyancy of the market, is that something as an opportunity for us, or we need to be cautious? So for dissecting all of that, we let me now welcome a guest who is an industry veteran, who is no stranger to our show, Mr. Andrew Holland, the CEO of Avendus Capital Public Markets Alternate Strategies LP. Andrew, as always, welcome to the show.
Thank you, Piyush. Thank you for this opportunity.
So let's start with the first one here, and let's understand what are you making out of central banks policies, Fed, RBI. Recently, RBI has upped its own GDP estimate, and this is followed by a strong sort of GDP data, which was a very positive surprise by a huge margin. What are you making out? What RBI is thinking? How is their own sort of estimate? And are you in agreement about the sort of entire economic estimate?
So our thinking hasn't overall changed. Maybe the timing of some of what I'm going to mention now has kind of slipped by a quarter. But we've always been of the view that the Federal Reserve had increased too much, and at some point this would have a big impact on demand. And cause a kind of a recession in the US. Now I know everyone's still talking about the Goldilocks scenario of a very shallow recession. I've been in the market many years, and I've never seen this kind of soft landing scenario. If you have a landing, or you have a hard landing, or you have no landing. So I think something's coming there. So we've always said that interest rates would fall quite sharply. And that's our expectation. I said it's probably been pushed out a quarter, but all the data now, from jobs data to inflation, is showing a very kind of dramatic fall in these figures. So if that was the case, then inflation, whilst it's been sticky in developed worlds, I think for emerging markets where commodities would play have a big impact on our inflation figures. The emerging markets have the ability to bring down rates a lot quicker. They were quick on the way up, quicker than the Fed in some respects. So I think that will play out. So in today's policy, from the RBI, I would say it's more of it's not a hawkish statement. It's a hold. Let's see how things develop. But I think with the growth in GDP, he can quite happily be where he is at the moment without having to spur the economy higher. So net, what I'm trying to say is that interest rates are going to fall globally. I think for emerging markets, including India, we can be a little bit quick with our interest rates lowering going forward, and that will be an extra fillip for the markets going into 2024.
I want to actually sort of ask you more on the last line. For interest rates to fall quickly or slowly, you need to actually have sort of supporting market developments happening. Are you actually sort of expecting commodity deflation? Because yes, there has been some cool off from the recent highs for energy prices. Yes, some metal prices, they have slightly come down. For us in the Indian markets, yes, some of the construction materials have cooled off. Maybe energy prices as they're getting imported, so that will help to an extent, though the pump prices don't change. But gold prices actually are going up. But overall, What actually are you really anticipating? What could be happening which leads to this interest rate sort of decreases?
Yeah, see, if you just look at the of what you've said, and let's take that forward. Um, US bond yields in October, if you remember, were hitting 5%, and there was big worries
Yes.
about higher for longer, everything. Now it's at 4.5%. The 2 year, that's the 2 year. The 10 years nearer to 4%. Those are big moves in the bond
Mm.
market from where we were. Um, Oil prices, despite OPEC saying that they're going to have production cuts, the price has fallen significantly since
Yes.
that announcement. So that's telling you that the global economy, including China, is slowing, and it's slowing a lot quicker than the commodity price is saying that the economy globally is slowing quicker than interest rates are going to, are falling at the moment. So that's what the market's baking in, and that's what we believe was always going to happen. So your commodity prices, your bond yields are a good forward indicator of where the Fed has to be. And we think the longer it stays there, the more pain it's going to have on the economy in the US, and therefore more sharper falls in interest rates will be needed.
Before I come back to the Indian economy, just a short touch back here. What you are looking must be the foreign institutions also would be looking at that. So, what actually do we really anticipate? Because this is dichotomy. You actually look at the Indian economic numbers, you look at sort of GDP growth, or you look at the stock markets, buoyancy. Then you actually anticipate something, some slowdown could be happening. So, what is the thought process which is would be right now going across the minds of foreign institutional investors for investing into India?
So foreign investors. So let's look at it from the viewpoint. Let's say there is going to be a recession. Not just a shallow kind of landing. Then investors will look through that to say, okay, interest rates will fall, and therefore the global economy will start to pick up. So that would be in a weaker dollar. I want to be in emerging markets where there's still stronger growth because of their domestic economies and exports. But I want to play that recovery in the global economy. So first of all, I'd probably go to some of the exporting countries like a Taiwan or Korea, which would be, kind of warrants on growth picking up. And China would be included in that. Now, for emerging markets, China's, has still got a lot of work to do. It's been taking a pea shooter to the problems that it has, and whilst incrementally it's shoring up the kind of the market, the stock market, and the property market. I think they need a big bazooka to get that property market and sentiment around it in terms of investors and the kind of consumers or people who are buying properties. That confidence is coming back. If they do that, then China will get incremented a lot of flows. So we have to see that in between time, because everyone's not liking China, then India becomes the place where you're going to put your money down, and that's what we've been seeing with some recent flows. On the back of the recent state elections, giving confidence to foreign investors. So India's going to get its flows. It might get less if China do something big and confidence comes back to that market.
So let's stay on the flows. Let's stay on your word elections, and I now go to sort of results here. September quarter results. Okay, basically there were even if I just look at the Nifty, I think more than half actually of the companies they either hit the mark or they actually positive surprise. But overall, what's the sense from the September quarter results? Which sectors you actually are seeing earnings momentum at present? What is your own expectation?
So it's quite interesting on the results season. I think let's just take away the more recent state elections. I mean, prior to that, the market hit 19,000, 18,900. That was after the results season, right? So there was no real catalyst in terms of earnings upgrades. And whilst the banking sector, which has been a perennial underperformer this year, whilst the results were good, I think two things came out of it. One, about NIMS, And no bank gave any kind of clarity of whether they think there's going to be any improvement. It's kind of a race to the bottom in terms of attracting NIMs, and therefore your margins are under pressure. Getting deposits. And secondly was, the talk about unsecured loans, and every bank saying, well, it's not me, until the RBI came out and did the measures that they did to rein this in a bit. So that's what's happened with the banking sector. Great results, but now you have the factor of NIMS compression, and you have now possibly the fact that loan growth has to be kind of cut, because a lot of those unsecured loans was boosting the kind of loan growth figures. So, we might see a few downgrades.
But Andrew, I'm just jumping in between here. Why is it that over the last month, 1.5 months, or maybe last 2 weeks especially, we have seen a sort of resurgence in the bank nifty, ICICI Bank, HDFC Bank. I'm taking some names here, but these actually are leading the rally, and the bank nifty, which was underperforming, now suddenly actually seeing itself either at or close to life high. What is the sense of what's happening here?
So I think what's happening, Piyush, is very simple, is that, going into those state elections, I think expectations were very low in terms of, how the BJP would fare. But, the sense was picking up that, prior to that, the Nifty went back to that 20,500, right? Or just below. On the basis because of global factors, not local factors. If you remember, the US, expectations from interest rates was a lot lower. Tech started to take off. So all of these factors helped our markets and other global markets too. Then we had the state elections, which obviously was much better than the market expected. So the confidence in, stability of government, going forward, maybe less in terms of SOPs having to be thrown into the economy to attract voters. So that helps with the fiscal. So I think all of those factors help the market for the next leg, and that has to be led by large caps. And in large caps,
but do you believe that because in our last conversation you were liking the private banks? Do you believe that there is still an opportunity to enter private banking space or the large cap private banking space?
Yeah, no, I do. I think, obviously I'm looking at markets at the moment which are looking slightly overbought. So, you can, depending on your time horizon, I still like the banks, and I'm not moving away from that. I think I think if the next leg is going to take us higher, it's got to be led by large caps and banks in particular. We're seeing a bit of consolidation in small and mid caps, which is no bad thing either. But I think at the moment I'd be looking at the large caps to make them more, kind of easier money going forward.
Right. And apart from the large caps, large cap banks, is there anything else which you like in the financial services space? There are insurance companies. There are basically NBFCs. Is there anything else which you're liking?
No, I play around at the margin on these. Obviously, when the insurance companies have had a reasonable run as well. So I'm just feeling, some of this has played out in the very short term. So I'd rather kind of play with the bank.
You're waiting for time.
Yeah.
You're waiting for your time.
Yes.
So
yes.
From there, let's also sort of touch back upon your liking, manufacturing, defense, and of late there has been a lot of momentum. A lot of manufacturing IPOs have come up. But broadly, which subsector in manufacturing you're liking at present? You still are seeing value in it. How's it?
So I think let me go through the themes very quickly. Defense and renewable energy is something which is not going to go away from India or globally. So, that is going to be a continued kind of growth story for India and for those companies involved. If I look at, kind of manufacturing, and I've looked at the electronic manufacturing in particular, and I think that's just ready, just at the the very start. It's probably just, as an aeroplane, it's probably just come out of the hangar. It hasn't even reached the runway yet, because there's going to be a lot of growth in this area going forward, and you're starting to see that. So I think the electronic manufacturing sector is something which I would very definitely, I think investors should look at. Take a long-term view. I mean, the PEs are quite high, but if you look 3 to 4 years out, they're all growing at, should be growing at 50% compound over that period. So I think there's a lot of value, going forward in terms of this sector. So that's the sector that I like. The other themes, obviously, within the capex kind of cycle is the kind of more geared towards the kind of smart cities, smart factories type of companies which service them. And in terms of premiumization, I still think the beverage industry, both alcoholic and non-alcoholic, again at the very beginning of a runway, which is going to see people move up that kind of curve in terms of what they drink, what they want to drink, and that's going to give better margins for these companies. So again, a good long-term theme.
Just jumping in between, must be a long-term margin uptrend, but any sort of major reason? Is it only about scale, capacity, economies of scale, or you're looking at some sort of a real raw material movements, or it is more about sort of volume growth? Why you are expecting margin uptrend there in the beverages?
I think it's a combination of volume growth accompanied by people moving up the price curve very quickly. I think we're looking at a very young population here who are willing to try new things, willing to move up the curve very quickly. I'm sure in your building you've got a nice coffee shop, which I'm sure you're using, which maybe 2-3 years back you might not have done, and the prices you're paying.
Yes, and I in fact I'm spotting that now actually it's not only about coffee. With coffee you have all types of snacks, all types of exotic sort of food. So yes, those listed companies definitely actually are evolving.
Yeah, and I noticed this in when I was in South Korea. As your per capita GDP, continues to grow, you'll initially start with your kind of, fridges and microwaves and then cars, and then you'll want to, as your income increases, you want more and more experiences, and you want some of the better things, which maybe were not available before. So I think that's the kind of the mood that I'm seeing. And when you go, I mean, look at the new restaurants which are opening. I mean, it's all, its standards are as good as in London, and people are happy to pay those kind of prices.
Yes. Premiumization, I think that's the word here. I think my last question, and I think that's basically we'll end up with that. I really wanted to ask you on the IT, because it's more about the timing. It's more about whether this is the time now. Valuations are looking okay. I said in the beginning that this is something which is now looking slightly strange. You have IT stocks there in US rallying sharply, recovering sharply, and here we are in India, where our IT stocks basically are still 70-20% down from their highs. What's your own sense? Is the worst over for them, or we are 1-2 quarters more away sort of from the recovery? Where are we right now?
Yeah, I think we spoke about this last time, and I think what we said, or what I said, was that
you have been right.
You have to take, it's to take the view. If you think interest rates are going to fall significantly next year, then obviously the tech stocks in the US are going to continue to kind of do well, and that will help give a good tailwind to our companies here. But of course, we're not quite in that high-end tech, right? We're not AI and where some of these stocks have been moving, like Nvidia. So we're going to be dragged up rather than there's a great growth story coming. But I think at these levels, it's worth kind of picking up 1 or 2 of the blue chips in the sector and saying, okay, I can sit on this. Its time will come. But I think in the shorter term, you probably have more excitement in, say, the banks, which is, I still think has room to move higher going forward. But I think on a longer term view, As India develops and technology develops here, I think the IT companies will forge a growth path. But I think it's not going to show right now.
Absolutely. So, noted. Point taken. Time has not come now. Perhaps financial services, I think, which will remain in the radar, and also markets is something I think which we'll keep watching for the economic cues here. But Andrew, as always, it's a pleasure talking to you and getting all the insights. Thanks a lot for coming on the show.
Thank you again.
And dear viewers, hope you enjoyed this show. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.